just going.
Yeah, go.
I think, I don't remember the last time we recorded one of these. I think like a month and a half ago. So we're behind. Our people are like, I was getting phone calls and shit. People are like, yo, where's the new podcast? How come you guys aren't?
Was it that long ago? And by
Uh,
our people, are you talking about my granddaughter Sophia? Was she like
yes.
texting you going,
She's
yo,
like, pop up. I want to see more
yo,
pop.
yo? I started going pee pee and poopy on the potty, and you and Ken didn't talk about it. Like, what's going on? Sophia's pissed, man. Yeah,
Well, as she should be, to be honest. Yeah, go ahead.
there we go. Yeah. She's like, Pop, I have to go pee pee. I said, go ahead, honey. So proud of you. And she's like, you come with me. I was like, all right, let's go. We're going on a tour of duty here.
Well, it's only fair. You make her come with you to the gym, so you should go with her to the potty.
Best, the highlight of the week.
Yes, sir. So how's
Yeah.
it been going down there in sunny Florida? Is it hot down there yet?
Dude, you know what? When from now on, when people ask me that question, I usually respond with, actually, we got a foot of snow this morning. Just like when people used to say to me, how are the kids? Are they getting big? I'd go, actually, believe it or not, mine are shrinking.
Yeah.
Like my kids are shrinking. Yeah, it's like living in hell between, June 15th, say, and maybe September 15th. But it's okay. There's air conditioning.
I was down in Florida. I was down in Destin last week. And really, it was nice. Really wasn't bad at all. Hit the beach for about an hour. Checked out the harbor walk down there. You ever been to Destin?
I haven't. No.
Really cool town. Really cool beach, like beachy town. A little touristy, but still very, very cool.
Yeah, I'll tell you, last week I was on the East Coast. I went to the Kennedy Space Station. I'm sorry, Kennedy Space Center. Dude, you want to talk about just wild. Highly recommend going there and having a couple of days there. Do the tour. Yeah. It's just mind blowing, man. Mind blowing.
All the old school NASA stuff.
Yep.
Like
you get to sit in the same room as, Apollo 11 and Apollo 13 was called, and seeing the space shuttle Atlantis, that's just mind blowing. Like, this was in outer space. Holy crap.
Or so they say.
Yeah. Well, you know what? Like, there was two things that I thought about when I was there. Number one was like, okay, you have scientists in there that are figuring out a way to get to Mars and a way to grow food on the moon. And on the other side of the planet, there's a human being just hoping to be able to get 4 or 5 ounces of clean drinking. Like, that's wild. My other thought was, they're talking about connecting to the International Space Station and all this. And literally I was like, you know what? What if this was just all BS? Like, what do we have to prove for it? Like, pictures? Right?
Yeah. I mean, yeah. Pictures. That's all we have. And
yeah,
I'm
sort of like 2.8% interest rates. Like, what do we have to prove, right, that actually happened, right?
Oof. And there are fewer and fewer people that have them, man. Like, I'm having that conversation every day. It's almost like it's like I don't do refis, are more like funerals. We memorialize the interest rate. We talk about how good it was to us and how much we really enjoyed having it, but now it's time to move on.
I'm tearing up, dude. I'm tearing up. There's a statistic that one of the Yahoos talked about, that 50% of homeowners right now have a 2 or a 3 in front of their interest rate. Another 25% have a 4 or a 5. So 75% of homeowners supposedly have one of those numbers in front of their.
That number's dropping every day. In fact, I might look that up just to see where it's at right now. Because that's the reality is that they might have it, and I'm running this every month. They might have a 2.5% interest rate, but they're paying 13, 14, 15% on credit cards. And $60,000, $70,000 worth of credit card debt, and they're sitting on $300,000 worth of equity. So it makes zero sense to hold on to your 3% rate if you have all this credit card debt at a much higher rate. When you do a blended rate comparison, now you can see what you're actually paying in your in totality on your debt, your blended interest rate, it's eye opening for people.
Now, do you feel, and I'm thinking of a story that I'll tell you in a second from an old client of mine, but do you think, are people getting that? Do they understand the math there? Are they able to go, oh, okay, I see the net picture here. Yes, I'm going to do that.
I think they see it. I don't think they get it before they talk to someone. I think that they get it once they talk to someone. But what pushes them, nobody wakes up in the morning and says, you know what? I really want to figure out what my blended rate is. Like they wake up in the morning like, dude, my credit card debt is out of control. I'm spending $1,000, $1,200 a month just on credit card debt, and it's not moving. It's not getting any lower. It's pain that causes people to make these decisions. Now, once you sit down with them and you explain it to them, a lot of times the light bulb goes off and it's, oh, this could actually be a better thing than holding on to this trophy interest rate that I look at every day and polish and tell people about, you know?
Yeah. I had a client reach out to me years ago about selling their house, and I asked them why, and they said, we have to sell it. We've got some, debt and whatever. And I said, okay. And they said, the problem is we haven't made a mortgage payment in like 4 or 5 months. And I said, okay. Now, and it was a CFO of a company. And I said, why not? And they said, well, we have to make our credit card payments. We're in whatever, 50, 60, 100, 200, whatever it was.
Yeah.
And I said, well, why are you paying your credit cards off and not paying your mortgage? And they looked at me straight, said, oh, we don't want it to affect our credit.
Yeah.
And and I was like, look, man, I'm no financial consultant, but I know there's secured debt and unsecured debt. That's unsecured debt. You could literally go bankrupt and not have to pay a dollar to them and keep your house. They chose to short sell their house.
Yeah.
And move on.
You know what's crazy is that a lot of times people find themselves they drift into this place. They don't move there overnight. They drift into this place where each month they're using $300 out of credit card debt, $400 out of credit card debt, $500 out of credit card debt just to pay the bills and to get by and maintain a lifestyle. And they're afraid that if they stop paying the credit cards, they won't be able to borrow against their credit cards anymore. And that frightens them because they're using it to live on. So yeah, they're like, all right, I could always catch up on my mortgage later, which is not, obviously ill advised, but that's because they're afraid they're going to cut their credit cards. And then they got to actually live on what they make, I'm not downplaying financial hardship is financial hardship. I have a friend who's like literally borrowing money to make their payments every month, and it's like, all right, it's time to take action. You know what I mean? Like reach out to your mortgage company. There's one thing you could always do is reach out to your mortgage company. There's a loss mitigation department with every mortgage company and just say, look, here's where I'm at. Some of them, unfortunately, be like, well, you're not behind, so we can't talk to you, which is like code for make a late payment and then we'll talk to you. But at that point, it's screwed. But anytime you can get with the loss mitigation department, start working on your mortgage before you fall behind is important.
I just had another brilliant story and I can't remember what it was. Teams, real estate teams, dude.
Yeah. What do you say?
Yeah, there's a huge, this is what I see. Unless we're talking about the Zillow Flex team or we're talking about the huge 40, 50, 100, 200 agent team that has a $200,000 a month budget for leads, their teams are going away.
They're shot. Yeah. Really?
Yeah. There's way too, there's no value. Like a lot of times a team will call me and say, hey, I know you're a good recruiter, whatever. Would you recruit to our team? And I said, well, it depends. Recruit me to your team. And when they get done, I'm like, okay, it sounds like I'm doing the work and you're taking 40 or 50% of my commission. That's what it sounds like to me. So the value that used to be there is no longer there because we can now hire. I was talking with one of my EXP partners today about this, and we went back to, he and I have been in the business both over 20 years. And I said, back when we learned about this, like teams were just sort of getting started, right? So it was this like, oh my gosh, I can join a team. I can get some leads. I have the leadership. I have the training and coaching. I have blah, 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 right? And it's a good situation. Now, like an agent, really, a lot of times why agents join a team, there's different reasons, but mainly it's like, I don't want to do the paperwork. Oh, I can join that team. And there's an admin team that does
That
it.
makes sense.
Now you have, I can name 5 transaction coordination companies that an agent can use.
Yeah.
So the only reason why I'm seeing now, there are like the homebuyer teams of like, I just like hanging out together. I'm not looking at it as a more of a business decision. What I'm seeing is, I'm thinking of a couple teams in particular that an agent goes to work for. Once they convert the lead, in other words, get the signature, the agent's out and the support team takes over. Now, that agent, depending, may only get 25 to 35%, but they're closing 6 to 8 deals a month.
Mm-hmm.
So they're still pulling in 20, 30 grand a month, which is a great job. It's pretty wild how it's changed.
I always say that, and it's the same in the mortgage business. Like my company buys loans from me, right? And what I spent for what they pay me for my loans to my branch, and then I have to decide, okay, how am I going to allocate those resources effectively so that I can maintain, top tier client experience, delegate, freeing up my time to do sales activities, and still be able to offer great rates, right? Like that's the constant balancing act. And I've seen it in the mortgage business where people, they don't allocate those resources effectively, right? Where they like someone who's doing a certain amount a month doesn't need an assistant, right? So if you still want to make all your commission and have an assistant and you're not closing enough to justify it, that money's going to come from somewhere and you're going to have to charge higher rates in order to afford that assistant. I think where there's teams, you get, could share resources, economies of scale, things like that. I think there's still some value down the real estate side too, right?
Well, yeah. Now that goes into the second half of this conversation from this morning. I'll give you an example. The biggest real estate company in the Philadelphia area is in the city. They have about 1,200 agents to franchise. It'll remain nameless. In May, they closed 226 million. And this is all public knowledge, 226 million. I know their profit because the region reports that, and then they report the most profitable. The top 10, the number 10 profitable one with this company had about $20,000 of owner profit, which means this office had less than 20,000 in profit for the month of May, and they closed 226 million.
Good
so,
Lord.
yeah. So, I mean, there's only a couple ways to look at that, but let's just say they were doing everything right. You're seeing the smart Remaxes, you're seeing the smart KWs, any franchise company, you're seeing them merging franchises together. That's what teams have to do. You've got the team of 6 to 10 to 12 agents over here that do 50, 60 million. You've got the team of that used to be 10 that's now 4 doing 35, 40 million. And they're all paying 100,000 plus to their staff because they're good people. They don't want to let them go. The reality is they need to merge together. In fact, I'm working on a couple big team mergers right now where they're going to join us all together, work out of Conshohocken and live happily ever after because the margins just aren't there.
Yeah.
And that is the move, man. It's a smart move. Now, what do you have to get out of the way? You got to get the egos out of the way.
I was just going to say egos. You got to get egos out of the way.
That's my job.
Yeah. Do you think that I will tell you on our end, it's starting to be visibly apparent that technology is creating productivity without a like one loan officer assistant now with the right technology can service 90 to $100 million worth of production in a 40-hour work week, where it used to be you needed 1.5, sometimes two LOAs to service, $100 million in production, because of the efficiencies that are coming with the technology adjustments. You seeing that on the real estate side too?
That's a good question. I don't think yet, at least with the agents that I'm talking to. Now, with that said, I'm going to say we're only about 6 months away because the teams that I'm working with right now, I had a conversation with one of the assistants the other day. And I said, hey, look, we have to get you ramped up to sell real estate because your position in every company and every team is going away. Like it's just going away.
You're talking about support people need to start thinking about getting licensed. Yeah, I'm seeing it on our side too. I am. I think that,
Unless the only exception is if they are that. What a great staff member, assistant, team member should be
yeah, on a retail
is
mortgage side, a good processor used to be able to do 20 to 30, purchase transactions a month. We're seeing that a good processor will be able to do 100. That's the vision where we're headed. And when you look at it, like, it's so funny that we look at commission as a percentage, right? 2.5%, 2.8%, right? We always look at commission as a percentage, and then we look at costs as dollar figures. We have to be looking at commission as a revenue line, not a percentage, and cost as a percentage of the transaction. Because if you have a $90,000 salary and you're spreading that $90,000 salary over 100 transactions, or spreading that $90,000 salary over 30 transactions, that's a threefold increase in cost because of lack of productivity, right? And I think on the real estate side too, like if you're a really, really, really good transaction coordinator, expect to be able to do more transactions for the same amount of money because that's where the efficiencies come from. You know, that's how, I mean, that's where we're at. Princeton Mortgage right now, we are revenue driven, cost per funded loan, make sure that our expenses are aligned so we can get the greatest experience with the lowest rates. And looking at it that way changes everything. The old model, like the other lot of mortgage companies right now, they still look at like your rate is based on a set margin. This is how much you need to make as a percentage of the loan. Well, what if it's a $900,000 loan? You're telling me that I still have to go out there and charge the same rate. Now I got to bring in $34,000, and the loan doesn't cost $34,000 to originate, but they're on a margin model. You got to bring in the same percentage on every loan. And I think that what Rich has done is broken that model into it's shattered it. It's awesome because we can be incredibly competitive when you get into those higher price points as a result.
Yeah. I love it, man. Got to be disruptive. One thing I know right now, things don't change. Have to be disruptive, have to have a great mindset, have to be extremely excellent at what you do. Excellent practice. Have to be able, when the question is asked, you have to know the answer.
Mm-hmm.
You have to be able to say, hey, let's go. I just went through this training with, I mean, the way that listing presentations are being done right now and objection handling is being done right now. By the way, if you have to practice objection handling, your opening sucks. So when you have a strong opening, you don't need a strong closing. There will not be an objection handler needed. However, for the ones that haven't caught up yet, this is where AI is really our friend.
Yeah.
Right. So Ken, you want to list your house at 1.2 million? I think it's 850. That's what the evidence, it doesn't matter what I think. The evidence is showing 850. Instead of having that wrestling match, which I never recommend anybody to do, just say, hey, let's use AI. Like, do you have a preference in AI? Do you like Claude, ChatGPT, Gronk? What do you like? Oh, I use
You
ChatGPT.
suggest bringing the seller into the fold, co-creating the AI.
That's it. Collaborate with them, man. And by the way, while we're here, right, says now 950, right? I was wrong. We were both off. Okay, great. 950. Let's talk about the marketing. Let's chat with chat. Put together a great marketing program for blah, 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 blah. Freaking no agents are doing it.
We just did a training today, a mini build. Some of our agents were on there. We did a mini build on using AI deep research. I'm sure you've used deep research. to build out a killer listing presentation. So that's going to be a big part of our next blueprint is listing presentations, relocation packages, prompt engineering. Prompting is becoming the thing. But tired of talking about AI. Let's talk about something else. Let's talk about.
I want to go on record to say I did not watch one highlight, one reel, one play, one game of the World Cup.
I don't blame you. Look, yeah, if you're looking for somebody to argue that soccer is a real sport, you're not going to find it here, and that's probably going to piss a lot of people off.
They used to carry my shoulder pads. That's what soccer players were for.
I heard it yesterday. There's too many guys on the field. The flopping is obnoxious.
Yes.
And it's too slow. They said if you can play with a man down and not like lose that much ground, then it's obvious that you didn't need that many guys on the field to begin with.
God's honest truth. When my boy, I have two boys and a girl. When my boys were growing up and one of their aunts or uncles would get them a soccer ball for Christmas or their birthday, I'd throw it in the trash. And 2 days later, Johnny, God's honest truth, Johnny Reddy would be like, Mom, did you see my soccer ball? She'd be like, no, Ed, do you know where the soccer ball is? I'm like, I don't know. It was right there. I mean, I don't know what happened to it. But
there's a bunch of soccer balls on the roof in the alley.
Yeah. And I was telling him, you can play soccer if you want. You just have to change your last name. That's all.
Yeah, that's great.
It might be a little abusive, but
I watched a couple of the USA games, and it was hard because it was in Philly. There was a lot going on, a lot of energy around it. I did, kind of, jump in and have some fun, but I didn't watch the final. I didn't watch much else other than the two out of the USA games. But yeah, it's an interesting sport. Now back to summer baseball and getting ready for football season.
Let's go, baby. Let's go. Yeah.
I had a really great conversation with Rich when we were together last week. We were talking about the cost of working with, let's just say, a low producing real estate agent, right? If you're a buyer and you're working with a low producing real estate agent, what are some of the risks that come with working with a low producing real estate agent?
You talk from the buyer's perspective?
From the buyer's perspective. Buyer beware. If you're going to hire someone and you want to ask the right questions, what should be asked? And if you find out the person is not doing a whole lot of business, is that something you should reconsider?
So let's define what a low producing real estate agent is.
Fair enough. Let's say 2 to 3 transactions a year.
Yeah, I agree.
You agree? Okay.
Yeah, I would say.
What are some of the hazards come with working with someone that's only doing 2 to 3 a year or worse?
Yeah, I mean, it's just common sense, man. It's like, would you have open heart surgery with a surgeon that does 3 operations a year? No, they're just not seasoned. They're not in the flow. Everything is going to be hard for them. They don't know the go-tos. They don't know the contract. They don't know that the right thing to do is go, let's look at the contract. They're probably going to be emotional because they're scared. They're fearful because there's no way that they can really know what they're doing during a transaction. So,
I mean, everybody's got to start somewhere. Yes, everyone's got to start somewhere. And the question is, if you're a buyer and you're out there, should you look at the number of transactions as one of the ways to determine whether or not they'd be someone to work with? And let's go to the flip side of the coin. What are some of the hazards of working with someone? You go online, you're like, wow, they did 160 transactions last year, something crazy. What's the risk?
Yeah. Well, it all depends. And it depends on what the client needs, what they're looking for. It also depends on the agent. And I think, like, after I said that, it's like, it all depends. And what I mean by that is, the question I always ask agents is, tell me why I should hire you as my buyer's agent. Tell me why I should hire you as my listing agent. And if they can't rattle something off, then you're not prepared. You don't practice enough.
What about, are you going to have another person manage the transaction after we go under contract? And if so, can I meet that person now? Do you think that happens enough?
Yeah, this is what this going to the one. Did you have a lot of coffee today? You're firing off an awful lot of questions, dude. An awful lot.
We haven't talked in a while. These have been rattling
I
around for
I
weeks.
feel like I'm backed against the wall at O'Donnell's Tavern on Garrett
Listen,
Road in that little alley, man.
you're an elite athlete at this, man. I got all the confidence in the world that you're going to be able to manage through this.
Dude, it's I live in Florida. It's 3:20 noon, too. It might as well be midnight. Dude, we start getting ready for bed around here around then.
I bet.
You know? So if this is what I would suggest no matter what. And I do this all the time with everything. Hey, let me know the last three human beings that you work with. I want to call them and see what their experience was like.
That's good. That's really good. Because that can cut through the noise on both sides of that spectrum, couldn't it?
Yep. That's what I would do. Yep. Something, yeah. I mean, I could really get into this and dissect it. But there are top producing agents, teams, hundreds and hundreds of transactions that move smooth as silk. And yeah, once the head honcho, the rainmaker, secures a listing, you may not hear from them again. And a lot of times that's good. That's a good thing, depending on how well the team is structured. Yeah. But let's just talk in general. In general, the question should be, okay, I'm looking in Ridley Park. I'm looking in Broomall. I'm looking in Westchester. I'm looking in Downingtown. What are some of the things that I should be looking out for? What's something that I don't know about that you know about because you're the expert, right? So in like the easy answers would be something like, if there's an UNO, what they look for in the UNO. Is it the mailbox numbers or is it $20,000 in concrete?
Yeah.
They just have to be. You have to really vet them fairly as a local expert.
Yeah. It's not an easy thing. That's why I brought it up, because there's you want to know what I think that's what it boils down. You want to know what questions to ask when you're getting ready to hire someone. And what's important about this is the agents are listening, is that you need to know what questions you think they're going to ask. You need to be able to have those answers all ready. And if I were talking to a real estate agent, I might ask, what questions do you prepare for on every single listing agreement or listing presentation? What questions are you preparing for with every single buyer consult? You should already know the questions that are going to be asked and have your answers lined up, at least the framework of all of it. I know what questions people are going to ask. I know they're going to ask, what's the rate? What's my payment? What's my cash out of pocket? What programs are there? Do you have any, do I have to put 20% down? And then a lot of times they'll be like, hey, I've only been in my job for 6 months. Is that a problem? I know the questions that people are going to ask. And that comes from the at bats. It comes from doing it for 24 years. Do you see that thing I put on Facebook, the reputation map that I built out?
No.
Oh,
I'll have to look at it.
You have to check it out. I was sitting in the car.
I think I unfriended you because we haven't been together for about a month and a half.
I don't blame you. If you go, so I was sitting in the car and I'm thinking I was at a closing, and the agent, the listing agent, I was doing the buy side for that agent. On the next transaction, it was like a little domino effect. It's like 3 people in one transaction that were all kind of all tied together, and I was fortunate that I was doing the mortgage for all of them. And I started thinking, like, there was more to that throughout the course of the month. There was a lot of transactions where I knew the listing agent, and as a mortgage person, when you've been in the business for 24, 25 years in your market, you begin to, not only are you well known, but you begin to know the other players in the market. And we were sitting in a settlement a week and a half ago, and the listing agent turned to the buyer agent and said, just, you remember, like, the reason we accepted this offer was because Ken was doing the mortgage. And I was flattered. I was, and I don't even, here's the funny thing. I know the listing agent. I know him well. I coached one of his kids. I never really worked with him before because he's got his guy, and that's okay. But he accepted that offer because of who was doing the mortgage.
Sure.
And it was like 4 other examples of that this month. And so I just started talking into, my phone while I was waiting. And I was like, got to chat, like build it out on a map so I can see it. Dude, it was pretty cool. It was really, really cool. You have to check it out.
I will definitely, I wrote it down. I'm definitely going to check it out.
I might do it every month from here on out.
Mm.
Just look for those examples where the connection and the reputation are what was paramount in making all these things happen.
Yeah. I just started coaching and I just recruited a newer agent. You'll be hearing from him. And he was asking, like, well, loan officers, like, how do I know a good one? How do I know which one? How do I? And I said, the first question you want to ask a loan officer is, tell me about your team. What assistant do you have? Tell me if I'm off base here. Tell me about your processor. How long you guys been working together? How many loans do you close a month? Like, what should I expect for callback time? What's the best way to communicate with you? And, because you can have the face of a company, right? Like the loan officer or the team leader or whatever. But man, unless you're doing 3 loans a month, like you're only as good as your team,
Yeah.
right?
Yeah, there's
And
some guys that are able to do 3 by themselves. And, anybody could do 3 by themselves. But yes, you start getting into the 8 to 10 range and you don't have the right systems in place, the loan officer will burn out. The loan officer will go in fits and starts with his energy. He'll be superstar. And this is good loan officers. A good loan
yeah,
officer will be a
oh, sure.
superstar one day and a dud the next just because they can't manage it all. I've seen really, really good loan officers who don't want to invest in their business, who they leads just like come and go. The voicemail that was left 3 weeks ago, and they're like, I never called this person back. It's
Yeah.
a voicemail just sitting in their inbox. So I think that, the questions you want to ask your loan officer is very straightforward. Is, if you're a realtor, how do you manage your leads, right? To make sure nothing falls through the cracks. How do you prefer to be introduced to people? What's your process for handling my buyers? I've had success with realtors developing relationships over the years, just kind of not role playing, but like, okay, sit down. I want to share with you exactly how I handle your buyer from the time I get the lead to the time they get to the settlement table. And when they can visualize that and they can see that, what's cool about it is once they see it in action, they realize that nothing is an accident,
Yeah.
right? Like, oh, this is how he does it. He told me exactly how he does it. But if I don't know how I do it, if I'm just like, yeah, you send me a lead, I talk to them at some point, I figure out, roughly how much they can afford and hope they come back to me and we'll close eventually. Like, that's not a system, that's not, and oh, by the way, I'll buy your Zillow leads. Like, there's loan officers out there that think that they don't really need to do a real good job because they'll just buy Zillow leads. And unfortunately, that's how you end up and down and then out. Eventually you're just out.
Yeah. And there's, that's, it's as you, as you are talking, I'm thinking about what most of my day really is. And it's usually higher producing real estate agents that they've got all that stuff taken care of. They know what they're doing there. They're making, I'm helping them make bigger decisions, helping them create bigger strategies. But like every once in a while, I'll get a call where somebody's like, hey, I'm thinking of joining black company. And I'll be like, okay, this is the deal that you will get, and tell them, my cap's going to be here. This is going to be the fee. This is going to be the thing. This is what I want in my term and termination. If I leave, listings go with me. And it is, I can't tell you, I'll have to add this up, but I know it's hundreds and hundreds and hundreds of thousands of dollars a year that I save real estate agents because I just know, and it's all being fair. I'm not being a jerk to the brokerage, but especially like a newer agent that might say have come out of the gate and done 3 or 4 million or more, they're not going to know what that royalty fee will do to their bottom line. They won't know to look at the independent contractor agreement. I'll bet you if you probably have 10,000 agents in a database. If you're able to call all of them and say, hey, can you show me your independent contractor agreement? they'd be like, I think I signed one, but I have no idea where it is. About 99.9%, right?
I believe that.
And there's a lot of money in that stuff, man. A lot of money. So the reason why I bring that up is right now we are in a position that as brokerage owners, operators, and agents, we have to step it up so that we are winning the Academy Award every day with what we do, how we treat our teams, how we treat our people, knowledge base, technology, AI. How do we wow? I used to call it the seduction of recruiting. Like, how do we seduce people into like, oh my gosh, I will never do business with anybody else. This is how it's done. Man, there's a lot going on. And you see the other side of it is, I mean, now you got me on a roll. I think I'm waking up. I think I took my afternoon nap. There is so much opportunity for real estate agents out there. I was guilty of looking at the agent Tampa Bree and going, oh my gosh, let me do some research on her. She's the funny agent that talks dirty a lot of times, and she'll be like, look at this house in West Palm Beach.
Yeah, I know
I
you're
know
talking about.
Jeffrey Epstein stayed here before, like that kind of stuff. But when you look her up, like her production, she sells like 1 or 2 homes a year, and you're thinking, what a fraud. She's one of the smartest real estate agents in the business because she leveraged her real estate license to teach marketing. And she's got about 1,000 people paying her a pretty penny a month as a subscription, where she makes more money per month than
Top
almost
producing real
every
estate.
agent out there. So what with that, why I'm bringing that up is there's so much. I mean, I look at the things that any agent can get paid on right now. It's unbelievable. Unbelievable.
Like what?
Literally, okay. So I'm thinking of an agent that is joining us. He or has joined us. He is a coaching company. He gets paid as a coach. He's a speaker and trainer. He gets paid to speak. He sells real estate, right? He's got a mortgage affiliation. He has title ownership and revenue share.
That's 6.
And you have agents out there that are still getting paid one dimension. They're with one-dimensional companies. Like they're done. Oh, and I'm sorry. I forgot investments. 7. He gets paid 7 ways from his real estate license.
I'm telling you, it's the real estate and mortgage business is the greatest. It's the greatest industry in the world. I say it all the time. It's the greatest industry in the world. All right, let's switch gears. What book are you reading?
I am, dude. I am so proud of myself. I had a staff meeting a couple weeks ago. It
With your
was
staff?
with my staff, which is myself, Sophia, and Johnny. Johnny must have had too much to drink that day because all he did was slobber. I'm like, dude, you're 1 now. You should be able to contribute. So I just finished this. Into the Magic Shop, a neurosurgeon's quest to discover the mysteries of the brain and secrets of the heart. Sky Michaels recommended this. It's really good. I'll send you the podcast that Mel Robbins did with Dr. Doty.
Okay.
He is one of the most beautiful, peaceful men that ever lived. And he just passed away, man. It was really sad. But I'll send you the podcast. He's a beautiful soul. However, I am rereading Seth Godin, Purple Cow.
Purple Cow. Okay.
I am rereading Decide. I know you and I talked about this one last year.
Yeah, but I don't have that. I never got that one. I have to make a mark. I have to make a note of that.
That's because you lie to me and say, I just ordered it. You never order it.
No, that's
Wealthy and Well-Known, rereading it.
making these notes.
And the book of coaching.
Okay.
I am into rereading everything right now.
I like that.
Doesn't mean.
Yo, pull that last one up. Let me see those tabs.
Yeah.
Yeah, that's great. That's great.
I should have just highlighted the whole book.
Yeah.
And this is a big boy book, but this is The Team of Rivals, the political genius of Abraham Lincoln. That dude, from what I read and see, he was like the most incredible strategist, influential president, leader, really, ever.
Wow.
So I'll be done this 2032,
Yeah,
2033 sometime.
that's a big boy.
Yeah, the words are really small, Ken.
And there's no pictures at all, I bet.
Not one. Not one. Yeah.
You can't even use your crayons. This is
No.
what I'm reading right now, recommended by one of my customers, Mastering the Rockefeller Habits. And I am rereading the 12 Commitments of Leadership. Maxwell. That is that downstairs? I think it's downstairs. I'm getting ready to leave for Ireland, so I want lots to read on the plane. So yeah.
Oh wow. When you go?
Sleep.
When are you going to Ireland?
I see here. About 45 minutes.
Get out. Nice, dude.
Yeah. No, we're headed to the airport about 5:00. I still gotta pack. You know the deal.
Yeah.
My wife and kids, Caitlin's coming with me. Bella's already there, so we're going, but we're not going with her. Like, that was very clear that we were not to go near her or wave to her if we see her, or like pretend like we don't know her.
Of course.
That's what my 17-year-old told us.
I have a new favorite coaching client that we're doing our thing like you and I are right here, right? And he moves in his house and we're going over whatever, listing, presentation, whatever. And I look behind him and I go, "Hey, is that Tommy fucking Shelby behind you?" And he goes, "There's a picture of Thomas Shelby behind him."
Nice.
And he's like, "Yeah, man, I'm obsessed." And I'm like, "Dude, you are now my favorite. I might not even charge you next month." Like, and I called
Peaky Blinders fan, are you?
What's that?
Are you a big Peaky Blinders fan?
Oh, I am the Peaky Blinders, dude. Are you kidding me? I am the Peaky Blinder. Oh my
You got
gosh.
a razor blade in that hat? There it is.
That's it, baby. I don't know which one. I think I'm Tommy.
You could have just come out of Central Casting for that show with that.
There we go.
Right there.
There we go. Yeah. I got the tat on the neck, man. Yeah.
Yeah, I'm a big fan of the show. Big fan.
Yeah. I mean, I may have to watch it again. They're continuing it, but of course without Tommy because he got killed in the movie.
Oh, whoa. What if people didn't see it, man?
People didn't see it. They're losers. And I'm going to ask them to not watch our podcast. If you didn't see it yet, I don't even want to be friends with you. Yeah. But anyway, yeah, he's my new favorite coaching client right now.
Nice.
Yeah.
Nice. Yeah, so it sounds like you got a full plate. All right, well, let's wrap this thing up, man. It's I know it's a Wednesday. It may not be a Wednesday when people listen to this, or maybe it is a Wednesday when people listen to this. What's your favorite thing to do on a Wednesday to keep your
Go
week?
to the beach.
Yeah? You like to
Go
take
to the beach.
Are you like a middle of the week rest guy, or?
So my week is front loaded all the time. Mondays, bonkers. Tuesdays, bonkers. Wednesdays start to tail off. Thursdays are a couple of little thingamajiggers. Friday is like creative day. It's like the Google day.
Okay.
I get to do whatever I want. I don't have any appointments. And I just get to create things. I get to work on things. I get to have free time. I usually go to the island and work for 3 or 4 hours. And yeah, it's a good day.
I like that. That's kind of like, I do a lot of creating on Fridays too. I leave a lot of white space on Fridays for that, because you wear two hats in this business. You have to create and you have to execute, and it's not the same energy. It's just, no matter what anybody says, it's not the same energy. It's like, it's, I don't know how to describe it, but creating and executing require two different energies. So can't do them both on the same day, or at least at the same time, for sure. Cool. All right, Ed, well, it was great catching up with you, man. We're going to get a bunch of great clips out of this one. Hopefully, are you liking the consistency of our clips that are going out?
I love it.
Are you getting tagged in it? Is my guy tagging you in them?
Yes.
All right, good. Yeah, I think we've gotten some decent ones over the last couple of weeks too. So
yeah, no doubt. Yeah, they're great. They're fun. I love them. And Have a blast in Ireland, brother.
Thank you. Yeah, it's gonna be fun. We leave here, like I said, we're about 5 o'clock, and we got to drive the dog down to my mother-in-law's, and then hop on a plane, and
What time's
see
your
what happens.
flight? 7 or 8 o'clock?
Yeah, 7:30, I think, 8 o'clock.
Yeah.
So and it's
6.5, 7 hours.
It's 5. Was it 7 hours? 7 hours there, 5 hours back. I can't remember, but yeah, it's direct flight from Philly to Dublin. So
Nice.
it's gonna be fun.
Hey, have a pint of Guinness on me.
My doctor said that Guinness is good for cholesterol. I don't know. That's what he told me. So
It's very good for cholesterol. I drank a lot of Guinness in my day, and that's why my LDL is about 190. It's still good.
nice. All right, man. I appreciate it. Let's not let too much time go by before we record another one.
Yeah, sounds good, brother.
Talk to you, bro.